Shocking on Wall Street, ladies and gentlemen. Nvidia came out with blockbuster earnings, where their executives actually said they would see revenues increase 170% year over year. Yet it did nothing for the markets, even though we woke up today thinking the bulls will be running. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. And we have a very special featured guest with us today. Chris Rowe from True Market Insiders is joining us for Buy, Hold, Sell. Chris, welcome to the program.
Thanks for having me.
Absolutely. Well, we're glad to have you back. You are an audience favorite. We received so many emails and messages from the audience. They love everything that you have to say, especially the fact that you are the technician and you're probably our best chartman that we have since the Gary B. Smith days on
Todd,
Fox.
Don't you know that he's got a whole bunch of people who send those emails in? Come on, man. You know.
Relatives. There you go. Well, listen. Well, you guys, both of you guys are experts in artificial intelligence stocks. The AI phenomenon is here. As Dan Ives pointed out, the gold rush in AI is happening as we speak. And we saw it in the earnings report yesterday. But hell, all of a sudden, you had the markets just give out. The Dow's worst one-day performance since March. S&P's worst one-day performance since August 2nd. And the NASDAQ, well, it's been a while since we had a rough day like this. So where does it go, Chris? I mean, I would think that if anything, we would have seen we'd see Intel. We'd see some of these other big companies coming out and popping today, but it was just the opposite. Where do we go?
Well, at first, I think it's important to recognize that the semiconductors are a risk-on sector, so they do well when people want to take risk. And the market pullback is kind of a self-fulfilling prophecy. It kind of has to pull back. You got interest rates that spiked higher, kind of has to pull back. September is the weakest month of the year, kind of has to pull back. We're going into October, and that's after a nice rally higher. But that big rally higher from May to July or through July was much, much stronger. So much money came out of other asset classes, commodities, fixed income, money market instruments, came out of that and into U.S. stocks. We haven't seen that much value flow out of other asset classes into U.S. stocks since April, May, June of 2009.
Yeah.
So
wow.
And some of you, that are listening to this, maybe you can envision that chart back in 2009. It was a 2009 bottom. We haven't seen that much value flow in since 2009. So this is a new bull market. We're in the advancing stage. We just entered the advancing stage from June. We had a bottom in June and then a bottom in October. From then through April, we had the basing stage. We're now in the advancing stage. So what we're looking at right now is what you refer to as a godsend. The market has pulled back. It has to pull back. It looks like it wants to pull back even more, so that's great. This is the best thing that could happen to investors right now. The problem is most investors are going to miss it because they're going to wonder if we're going back into bear market territory. You got big, fat yields right now. They can hide in money market. They can hide in treasuries. They're getting more and more excited as interest rates go up. They're going to miss an explosive market. They should be hunting right now. It's wabbit season right now.
It's wabbit.
So
wabbit.
Everybody's talking about Nvidia, semiconductors, things like that. Let me tell you something. Most of the market has supply and control right now. All right. There's a couple of key areas that have demand and control. There's energy, oil, service, oil and coal. There's drug stocks too. And just yesterday, semiconductors took the lead. Semiconductors are back. So if you look at it kind of a bigger picture, you have a big bull market. You have an intermediate term pullback within that big bull market. The fundamental story, I'll say very quickly because I don't want to hog the whole call, but the fundamental story on semiconductors. I have looked at the fundamentals of every single semiconductor stock. And for the last year or so, you've seen they've been growing, but the growth has been slowing in terms of their earnings and in terms of the revenue. So people kind of focusing on semiconductor stocks, they want to see them prove themselves. So even though you had Nvidia come out and have positive fundamental projections, and you've got some other semiconductor stocks out there that had explosive earnings recently, it's kind of like a wait and see, and that kind of fits into that seasonal pattern and interest rates going higher. So kind of wait and see. But right now you're looking at the strongest sectors of the market: semiconductors, energy stocks. It's a godsend. You should be out shopping right now. If you're aggressive, buy into this weakness. If you're not aggressive, just wait for a little little sign of a bottom. The RSI semiconductors were way oversold here, way oversold, and demand is taking control after being oversold. You want to own semiconductors here.
Well, you know,
Toby, I gotta say, I love it. I'm getting my champagne. So you start talking. I'll be back in a few minutes.
Well, what was interesting is that actually, you know, when I joined with TMI and Chris's publishing company, the one thing that really impressed me was how right he'd been on semiconductors. I mean, transformative research, we've been long semiconductors for basically forever, but with PC sales down and then, you know, cell phone sales down and all the other parts, they were, you know, starting to slow up, but they never broke. And they were the first one in, you know, in October 2002 to start to come back. So that impressed me. If you look at my buy list now, 1, 2, 3, 4, 5, we're almost all semiconductors or a version of semiconductor. Now, part of that is because of AI. And you know, our AI list has done pretty daggone well. I think we're up now about 65% for the year.
Wow.
But the reason is that we didn't go chase it. I mean, one of the lessons I learned a long time ago, certainly in the .com world, running money, running a hedge fund, et cetera, we should have crushed it in 2001, Todd, because we were short and so on and so forth. But the short covering rallies were 30% up rallies. And you know, so you'd learn not to chase the short and you learn not to chase the long. Clearly, when Nvidia came out in that late May number and just blew, you know, the mother of all beats, right? Then FOMO came in. To Chris's point, FOMO is hard to measure on a chart, but you can see it on a chart. It looks like a Viagra triangle, right? You know, it just goes straight up, you know, boom, 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 boom. And at some point in time, people, all the FOMO people will have bought. They all go in. I get a chart on how many market orders versus limit orders. FOMO is famous for just market orders. In other words, I'll buy it at any price. I just got to do it. I just can't miss it, right? And we got that peak, you know, really in June. And that was awesome. And then we pulled back as a healthy market does. And a healthy market, and Chris and I were talking about this. I always go to look at the end of August. We're living in New York and being in New York every week for, you know, 20 years. I would not see the same people on the last week of August. I wouldn't see them in September. You know, they literally went to the Hamptons. Now, Chris says, well, I'm an old fart. That's not exactly the F word he used, but it was, it's more than that because algorithmic trading is now 70% of the market. Today, it was 81%. So people, I just believe, if they're going to trade their own account, that you can't control other people's FOMO. You can't control other people's manias. You can take advantage of those manias. And, you know, Chris knows we had a couple of stocks that just went maniacally up, you know, 200% during the first AI mania. And I always advise people to sell that, you idiot. You know, if the market returns 7% a year, you just got 30 years of returns in about 8 days, and then let it come back. And so we were able to do that. And now we waited for Nvidia to come back under. We waited for, you know, Arista Networks. I'm just looking at the list. And they all came back, as they always will, because on a day-to-day basis, there's maybe 100 reasons why something was going to go up. But on that same day, there's 100 reasons why it would come back. And normally it's just everybody who could buy and would put a market order in, and it was called the marginal buyer. Remember, the marginal buyer of stocks is the price insensitive buyer. And because of the weightings of all the S&P and QQQs, et cetera, we were getting this ramping up where more money went into the S&P 500 indexes. So they had to buy the Magnificent Seven, right? And so that was 90% of the move. It's healthy now for the Magnificent Seven to not be so magnificent, and it's broadened out. And that's the nature of a market. Because at the end of the day, there's 75, 80% of the trades were robots today. But those robots got programmed by real people. And the real people program them just to say, if this happens with volume or this happens with the altitude of the change, that we're going to sell, and vice versa. So the market worked, is what I'm trying to say.
Yeah.
Well, if you're going to say, well, Chris, real quick, though, if you're going to say that this is all because of algorithms that we're all of a sudden going to have where you have the bots that are trading, that human trading that's taking place, and people are getting out of the market. The numbers yesterday should have been what really, I mean, I don't think there's a trader, even if they're on vacation or not, they definitely had an eyeball on that earnings report. And everybody woke up today thinking, hey, bulls are going to be running. Yet you had the IT sector of the S&P 500 was the worst performing one of the day,
you're wrong,
down
Todd.
over 2%.
Todd, you're wrong.
Tell me.
You're wrong
Tell
because real traders saw that jam up in the end of the day and in the aftermarket. And real traders said, I'm going to take those profits. Those are the easiest profits I'll ever get. In one day, some of these stocks up 25%. If you're a trader, remember, there's an investor and then there's a trader. From a trader standpoint, to get 25% on a stock in 8 hours, you would break all rules of trading not to take that profit because it will come back. And there's enough people, all the people who were going to buy did buy. When you see a Viagra triangle, chart like that, real people say, okay, well, I'm not going to buy into FOMO. I'm going to let it come back. Or if I was in it, I'm going to sell it. Chris, I don't know. You agree or disagree?
I mean, I think that to focus on the short term right now is a mistake. I think that when you have something that's so obvious and so easy, you're having profits basically handed to you right now. It's so obvious when you're looking at the intermediate and the long term that it doesn't make sense to me to focus on all the short term zigs and zags. That there's a few things that I'll say. If you're gonna trade, what you want to do is you want to sell naked puts and back into these stocks, because when the market's fearful and stocks are selling off, the options prices are getting bigger. You can get paid on some of these things in 30 days, like 15%, and that's or 20% in some cases. You're getting these fat premiums that you can back into these things. But having said that, I think you want to focus on the intermediate term and the long term. Right now, it's super, super obvious. And I think, Tobin, you're absolutely right. AI stocks, that's going to be the next big wave. I mean, we're already here, right? And that therefore semiconductor stocks are the big sector to be in. What I've seen when I looked at I'm telling you, I looked at every single one of the semiconductor stocks fundamentals, earnings growth, things like that. And earnings have been slowing, but at the same time, with the majority of these where earnings have been slowing, what you're also seeing is a larger and larger and larger number of funds getting into those stocks. So you can see how many funds own the stocks. And, the funds they get into these stocks, they're not buying it for a trade, for a short term. They're getting in, they're positioning themselves. And once they turn green and they go, you have a larger number of funds that are players now in the semiconductor sector that are going to be big buyers in the next wave. So that's what I'm saying. You want to be, I told you guys back in November, semiconductors is going to be the subsector, not the sector where there's 10 or 11. I'm talking about the subsector of the year, if not energy. So
there you go.
The long-term picture is what you want to look at. You got something so obvious right now. Position yourselves in semiconductor stocks.
I like that. Okay. Well, real quick. Okay. Because
it might bleed a little bit first, but don't be frightened by that.
Right.
There you go. Well, I know the audience, they want to know names. They want to know which ones of those AI stocks that they should maybe take a look at. But we're going to leave that until after the break. So sticking with us today. There you go. That's what we call in show business a teaser. That's right. Well, today our featured guest is Chris Rowe. He is the founder and CEO of True Market Insiders. We welcome everyone to go to truemarketinsiders.io for more information and sign up for all the great newsletters. And Tobin obviously is one of the featured editors over there as well. So there you go. He is the guru. He's the OG. That's right. And the OG is going to stick with us right after the break. So please stay with us. We'll be right back.
Buy, hold, sell, brought to you by CrossCheck Management.
There's something special about Friday night college football games.
When you have a Friday night college game, everybody's watching. Prime time, national audience from College Park. Friday night in the shell, nothing better.
What does it mean to be a leader?
It's taking my first solo flight.
At the University of North Dakota, we lead our own way.
Ready for business
in brief.
Bloomberg Briefs puts the power of Bloomberg to work for you with over 15 industry-specific newsletters available only by subscription. Each offers proprietary data, researched and written by acknowledged experts. Top analysts, dedicated economists, senior business editors, all presented in a concise, uncluttered environment.
It gives me the edge I need.
Go to BloombergBriefs.com right now for your free 30-day trial.
Welcome back to Buy, Hold, Sell. A big selling day in the markets, despite the great earnings report out of Nvidia, and we actually saw the entire semiconductor index drop, and we saw not just them, we actually saw all of tech, Netflix, Apple, Amazon, everything took a loss. Even a dollar store lost money today, Toby. I'm not sure where that came from, but who knows? I guess things are really good.
Well, it's easy to steal a lot of stuff at the dollar store. I still can't believe, listening to some of these calls, how like at Dick's Sporting Goods, which I love that store. It's huge. And they
we know you love Dick's Sporting Goods.
Yeah, 25.
You know what?
Kids run in the store and run out with all this sneakers. Don't get me started.
But that's going to Dick's, though. But you have Target that's coming out saying the same thing.
Yeah.
I mean, are there trucks getting ripped off? Like, is it like what from the movie Casino, where there are Goodfellas, where they're ripping off the truck before it actually gets to the store? I mean, nobody's stealing a thing of Old Spice, and it's going to create a $20 billion shortfall. I think it's a poor excuse. I think the management just sucks over at those big box stores right now. They don't know what to do with themselves.
Tell that to Oakland and
San Francisco. We talked to we've had Gina Martin Adams on the show. She said out of the entire country, the one pocket in the country that is showing tremendous weakness is San Francisco. So it's not just the crime, it's the economy, everything else. Let's spin out of this right now, because everybody wants to know, what should you be investing in? And Toby, I'm going to lead this one off with you. I know that you have been hot on the AI sector, and I know that you have something you've been chomping at the bit to tell the audience.
Well, thank you, Todd. Thank you, Todd. Well, here's a couple of things. I have a network of subject matter experts I've developed over 25, 30 years. And many of those people in that network are in the semiconductor business. And when people think about semiconductors, yeah, you do think about Nvidia, you do think about AMD, because they make these GPUs and CPUs. Well, the CPUs in the AI world are going out. They're getting replaced by graphic processing units. And that's what Nvidia makes. AMD is going to have a new one coming out here in November. But what people forget about that, memory is a semiconductor too. And, Micron is sort of the king of the castle there. Every time you add AI capability, particularly in this generative AI, you exponentially add a need for memory. However, at some point in time, you can only have so many chips in there, right? And what NVIDIA does really well is manage the memory on a split second by split second way, so you don't have to have as much memory. But ultimately, as this now we get more towards actual artificial general intelligence, all that goes out the window because of the memory needs. So I like a company called Pure Storage, PST.
Pure Storage.
Yeah, Pure Storage is a new technology that is 100 times better in memory management than a Micron chip or any of these DRAM chips, because they're buying millions of DRAM chips just to be able to keep up with the graphic processing units, and they are replacing. In other words, as you start to get these new well, when you get the new racks, basically, if you think about it, if you ever been into these huge storage systems that they run for the cloud, these hyperscalers, that's what they call Microsoft, that's what they call some of the other guys, Google and Microsoft and Oracle. These hyperscalers, they can't buy any more memory. They have to buy Pure Storage memory because it's 100 times bigger, it's faster, etc. So as you start to build out these hyperscalers, and everybody becomes a hyperscaler, because everybody is every kid when they go back to school is going to need to be able to say, hey, how do you divide 4 by 25 into the third power? And get an answer from ChatGPT, right? So Pure Storage because people don't know about it very much. The engineers that I know that are in that business say they are switching their storage in their big hyperscaler units to Pure Storage because it's the only storage that they can escalate and not have to completely buy a new rack or 10 new racks, et cetera, et cetera.
Ticker on that is PSTG. It's actually up 31.5% year to date, despite being down 6% on the day today. Still up over 30%. It's a good pick. I like that one. Chris, what do you think? I mean, is Toby full of crap right now on this one, or do you think he's got a winner?
Well, that's not.
I mean,
nice.
if you've been following Tobin as long as I have, you just basically blindly listen to the guy. I mean, the guy, you might take a hit now and again, but you're gonna have a big winner like Siri or one of these giant winners that's gonna make up for any hits. So I just kind of blindly follow him.
He is the OG. There's no doubt about that.
All right, that's the last time for that. Okay, this is the last time. I just got a haircut, man. Come on.
We'll put that on your media pass. Chris, what do you think? What do you got? You got what are your winners right now? Because I know you just want to lay it out there for the audience because everybody's on the edge of their seat right now, waiting to hear what you have to say.
He's sister semi. You're gonna have to grab
a pen or something like that.
I got my Sharpie.
Got a few semiconductors for you. I've got well-known ones and I've got ones that nobody knows about that are a little more risky. But start with the most well-known. AMD. AMD probably is going to pull back just a little bit more here. You want to catch that falling dagger. You want to buy it on the dip. Yeah, I would buy it here. It's at $100, 180 or something like that. I like AMD. It's one of those stocks that you see lots and lots of funds pouring into every single quarter. So Advanced Micro Devices. You also have
59% year to date. That's incredible.
We have it on our list. We have it on our list too, so it must be good.
Wow.
Yeah.
Got to be good.
Axcelis, ACLS is another one. You have funds just piling into that stock. You get to buy that stock. It's up, right? You could probably buy it on a little bit more of a pullback here. It's at 169. You can probably buy it around $150 or something like that. I'm giving you a shopping list so you can buy these things on the dip. You have NVTS, that's Nancy, Victor, Tom, Sam, that's Navitas. And this is one that I really like because it's pulled back pretty significantly. It's down at 8. Once it gets above $10, you got a lot of funds out there that are now allowed to buy this stock. And you can see the funds piling into this one and the fundamentals are great. So quarter over quarter, going back a year, there were 59 funds that owned it. It's not a huge company, 1.4 billion. 59 funds, a quarter later, 69 funds, a quarter later, 90 funds, and a quarter later, 157 funds. Again, They just got into it. They're going to keep accumulating these stocks. And what I really like about this one, again, it's NVTS, is management still owns 36% of the company. It's in their best interest to get this stock higher. I love when management owns the company.
Yeah.
I've got a couple more
ticker on the NVTS up 130% year to date. 130%. Does Kathy Wood own this one, Toby?
No, she doesn't. But it's interesting because this was a SPAC, if I'm not mistaken, and all of the SPACs got spanked. And I have been looking at these broken up, busted up SPACs, and NVTS is one on my list, so it's got to be good.
Love it. All right, Chris, what else you got?
Yeah, there's a reason these stocks trade up 100% in a market like this. It's because they're being pushed higher by institutional buyers that are just first getting into the damn thing. And, they're buying it recklessly with little regard to price. They're tripping over each other, trying to get to the trading room. They don't give a shit what price they pay. That's why it's up 100%, because they think it's going to go a lot higher.
But these stocks aren't crap stocks either. We're not talking about penny stocks right now. We're talking about real companies that actually have real reports, real bottom lines.
They also had a
really
large short position at least 3 months ago.
Right, because for the last year, you've seen the deceleration of the earnings growth and deceleration of the revenue growth. So they started getting bearish on these semiconductors foolishly. I don't know what the hell they were thinking. Here's another little tiny company you might have heard of. It's called Broadcom. $352 billion valuation. It's AVGO, Apple, Victor, George, Oscar. This is another one where funds are just piling into the stock. I'm not going to go through the, quarter by quarter like I did with the last one, but I'm just telling you that funds are piling into the stock every single quarter. Another one is going to be Allegro, ALGM, Apple, I guess Larry, George, Michael. Let's call it George Michael. Why not?
Sure.
Now, funds own 79%. So funds are basically fully in control of this. It's a $7 billion valuation. And I will read the funds participation level quarter to quarter. So September last year, 369 funds owned it. December, 468 funds. March, 603. And as of June, 626. They are piling into this stock. The earnings are accelerating and the sales are accelerating. So think about what I've been saying. The semiconductor sector, most of these stocks have seen their growth decelerating. Okay, so slower and slower growth. This one, you've seen the earnings and the revenue accelerating. Lots of funds piling into this one.
Hey, Chris, let me ask you this, because you brought this up a couple of times on some of these equities where you have funds that are investing in them. Is that something that you take into consideration or are you just simply looking at charts and then saying, okay, this stock is poised for a breakout?
I mean, it's both. It depends on the time frame, especially. But I want the wind at my sails. I want institutional participation. I want to swim with the current. If you've got institutions behind you buying stock after you bought stock, they didn't get in for 5 or 10%.
Yeah.
You know how much money it costs to make a decision to run these businesses and to get into and pile hundreds of billions of dollars into this sector. So, I mean, when I look at funds diving into this sector head first, they're going to continue building their positions, and then you have more and more participants that are doing it. You want to do that when there's a lot of institutions. I'll give you one.
That's good. Nobody talks this way, I got to say. So I would imagine the audience, if you want to hear more, because I'm sure you're putting this in everything that you guys are writing over at True Market Insiders.
Absolutely.
You definitely want to check out truemarketinsiders.io, because this is the in-depth analysis you're not going to get on CNBC or Fox Business.
I appreciate that. I'll give you one more. This one's a little riskier. Funds are kind of it's about the same number of funds are kind of getting out of it. It's had some problems. I'm not going to dive into all that, but it's a stock trading at about $3.40. And it's a GSI Technology. They've got a market cap of $84 million. Not a big company. The stock has gotten really, really smacked around, really, really beaten up. But the stock was up at about $10. And it's pulled back to $3.40. So I think you could probably buy this here on a nice bounce. I think you could see the stock trading up above $5. So you probably make like 80% on this just in the short term. And management owns 32% of this one. So, it could end up being a big winner. You never know.
There's sort of a backdoor AI play because their technology actually accelerates memory and it accelerates which, again, you need in the AI world. And they ran up, again, like crazy because unlike some of the companies where they actually put AI in their call sign, ticker symbol, these guys are way underneath the transom of the average investor. But Chris, I totally agree with you. From a fundamental standpoint, they are in great position. The valuation is nothing. Their gross margins when they sell are very high. It's still in the startup takeoff phase, but I'm with you there, brother. I like it.
It's a very, very small company. Yeah, I mean, they do like 20 million, 25 million a year in sales. It's not a big company, but I think you could get a nice dead cat bounce here from 330, 340 up to about $5.
I always feel so bad for the cats when we talk about the dead cat bounce, Chris.
Well, I mean, this is a stock that it traded from $1.40 up to $9.80 down to $3.22. So you could buy it here. It really seems like it's kind of leveling out before a quick.
Well,
pop.
also, Chris, just finally that. So now I have this screen now that shows me how many mentions on Reddit and how many mentions in the meme section. And GSI came on one day and its meme level went up like 400%. And that's a new part of investing now that if there was a lot of shorts against it. So the meme, at the Wall Street stonks section of Reddit.
Wall Street bets.
Yeah, Wall Street. I call it Wall Street stonks. I love it.
Yeah, I know those guys.
Yeah. Well, there were just 1,000 go, dude, to the moon. So you know that those were the new marginal buyers, and they just crushed the shorts. That's a whole nother issue. One day we'll do something about how the short covering guys, how the short guys are getting crushed by these, meme stocks. But
we would definitely.
I do recommend someone, if you ever see a stock that goes up 300% in 8 days, go on Reddit. Just check to see, if there's just not a freaking group of young FOMO YOLO dudes cranking on it because it's crazy.
Well, here you had a stock. Here you had a stock that typically trades, 60,000 shares a day, and then it's trading 100 million shares a day.
Yes.
The next day, then it goes from $1.50 up to 7.29. So it's a fun stock. You're taking a shot. I mean, it could get beat up too, but it's easy to move because it trades 100,000 shares a day, something like that. Very easy to move this stock. I think is
what's the float, Chris? Do you have that on your chart in front of you?
Sure, why not?
Yeah.
15 million shares.
So it trades 100 million in a day, which means it turns over its entire float 7 times.
Yeah.
That is a meme attack, baby.
Yeah, and the good thing about a stock like this, we used to I used to work on Wall Street. We used to say this all the time to people: when you have a market that people are kind of worried about, like this one we're talking about, try to control the short-term thing. However, this thing is already traded $10.3. It's already got clobbered. It's already got clobbered. That much more selling in this, and and I think you could trade it from $3.36 to $5, but it's also one of those things like maybe $3.20.
There you go. It's under the radar because of its small cap.
It looks like crap. If you don't buy it when it looks like crap, you're never going to buy a bargain.
Yeah, I'm with you. But again, what I try to always tell people, is if, let's say, you get in the next GSI, let's say it's AGI or whatever, and that stock goes up 300% in 5 days, you better be a seller of that. Because
this one you definitely get the hell out. Yeah.
It's unnatural buying. It's short covering. In other words, most people don't know that short covering basically means, particularly if you're a hedge fund, that you've sold the stock short, you borrowed it, and then you sold it because you thought this price was coming down. But it's all on margin. And if something comes down like from $10 to $2, well, you did great. But for this hedge fund short seller to make money, they have to buy it back. They have to buy back the shares less than what they sold them at. And that's how they make a profit. Well, if the meme guys get into this, then all of a sudden there's this thing called the margin clerk. I don't know if you remember that in your days on the floor, but there's a person who sends you, it used to be like a phone would ring. Now, it comes on your iPhone and it says, dude, you need to deposit $1 million into your margin account. Otherwise, we're going to liquidate all your stuff until you pay that back. That is the fear of every hedge fund, every trader, desk trader. So you get the F out of there when that thing starts popping. And so those are the mechanics. It has nothing to do with the fundamentals. But in a stock like that, I think you have to understand that the mechanics of the market are, if they come out with a big news flash or they get a big order, that stock is going to be another Viagra chart.
There you go. There you
probably won't get 40% in a day trading AMD, but this one, GSIT,
GSIT it is. Well, guys, you said it all. That's all I wanted to say. And I know we're going to have you back again, Chris, because I know you're going to have a lot more of these great stocks for the audience to hear about and possibly consider for their own portfolios. Yeah, so listen, we want to go ahead.
I love the show. You guys are hilarious.
Absolutely. Well, we try to be as entertaining as possible, especially for such a serious subject when it comes to money. So I think we're having some fun with it. But listen, on behalf of Chris Rowe, actually, we want to invite the entire audience to go to TrueMarketInsiders.io. You can actually see what Chris has to write, what Tobin has to write. Take a look, subscribe. You definitely will be happy with it.
We also have free subscriptions too. I mean, it's
free
really
good.
Freebies. Go for the free lunch.
Freebies it is. Freebies it is. Well, that's great. TrueMarketInsiders.io. So on behalf of Chris Rowe from True Market Insiders and Tobin Smith, I am Todd Schoenberger. Thanks again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
I want you to smash that like button.